Welcome back. Still tuned into the market. For now, we're holding out at 14,743. It's a cut of about 0.7%. Yet again, it's the broader market that's attempting to put up that show of resilience. It's in the green, albeit by the skin of its teeth. Power Grid, L&T, Tata Motors, NTPC and SBI, they're some of the winners in trade. But let's take stock of what's happening when it comes to the private equity deals as well. What has been the impact due to COVID, as well as which are some of the sectors that look promising in the long haul. Abhishek Sharman is the founder and managing director at Carpediem Capital, now joining in on the show. Good to have you on board, Abhishek. Avan joining in, and clearly, your fund is very focused on investing within the SME sector, consumer brands, the organized services. So lots to talk about. Take us through how exactly this impact of the pandemic has really been felt within the entire SME space, and how have you reduced or altered your overall strategy when it comes to investing in these companies?
Yeah, hi, good morning, Avan. I think pandemic has obviously had an impact across the board. And when we use SME, I think it's a large ecosystem that we're talking about. The part of the ecosystem that we are focused on, which is largely consumer services businesses, they tend to be more efficient by nature, and the good part is that most of these companies, A, have less leverage on the balance sheets, and B, many of them get categorized in essential or quasi-essential categories. So I think the consumer and services part of the landscape has certainly been less impacted. Having said that, SMEs across the board in India do have a lack of capital issue. Most SMEs in India don't operate with a very strong balance sheet. Access to capital at the best of times is a challenge. And during pandemic, given that we don't have a meaningful program to support these companies, I think what you're going to see is balance sheets getting ruptured, needing repair over a period of time. There is certainly a huge benefit to companies which are backed by capital, backed by private equity capital, because in times like these, they have some sort of a helpline, some sort of an access, and sometimes what we do, like we have done in a couple of our companies, is that we try and make the most of this situation and be more aggressive. We try and do acquisitions because many of these purchases turn out to be very accretive when you're in benign times. So I would say across the board, certainly an impact. Consumer services probably less impacted in terms of what does it mean in terms of capital allocation, where we would like to invest. I think that thesis doesn't change much because in private equity you're investing for a 4, 5, 6, 7 year horizon. The current hope still is that while patchy, the COVID impact should wither away at some point in time, whether it's 12 months, 18 months, 24 months. One has to wait and watch. But it's certainly given a big boost to certain parts of the economy. I think digital-first consumer brands are going to be a key beneficiary. Tech and tech-enabled services in general are going to do well. Things like food delivery, I would say essential delivery, logistics, food and vegetable delivery, people like Zomato and Swiggy. And then last but not the least, I think that parts of healthcare infrastructure which require investment are certainly going to get benefited, because what the pandemic has shown is that there is a reason why 18% of US GDP is healthcare and 11% of EU GDP is healthcare. And I think one of the things that we are going to see is that investment in healthcare is going to grow quite a bit from the levels where we are. We are about 3% of the GDP. I think it has to go closer to 7-8% of GDP. So I think those are the areas which are likely to see, and for the right reasons, a fair amount of activity going forward.
Abhishek, what about the overall tech-enabled services? I know you touched upon that, but do you think that that is just going to be the future, that a lot of these companies, particularly within the consumer space as well, will have to, in order to survive, have an omni-channel strategy with a very steady online or digitized presence? Is that going to be the future?
Absolutely. I think that was the future even before the pandemic. I think it's just become more stark. Having said that, you'd be surprised at how soon mean reversion happens. For example, when demonetization happened, people believed that the cash economy will get ruptured, and digital payments will come to the fore, and everything will become digital. But post demonetization, if you have to believe data, then one would assume, one would find that cash circulation as a percentage of economy actually went up. So right now, I mean, what's staring at your face is that tech, digital first, should do very well. And that was anyhow the theme. So basically, if you look at a secular trend over a period of time, that's a very safe theme to bet upon. But having said that, will traditional retail, would the brick and mortar businesses lose their sheen? I don't think so. Amazon has done very well, but so has Walmart. If you look at the whole pandemic period. So omni-channel, yes. I think every business that we have invested in, and most businesses that warrant investors to look at them in a meaningful manner, are committed to tech, are committed to potentially an omni-channel strategy, because that's something which is going to grow in prominence. What I would not say is that whether that is going to be a disproportionate part of the value creation going forward, because I expect some level of pullback to happen once the entire COVID situation goes away.
Fair enough. So adopting that strong omni-channel strategy is definitely the way forward. Give us a sense as to, within your fund, which are some of the companies that have been invested in. Like we said, it's consumer brands, organized services, particularly within the SME sector. Walk us through some of the companies that have been invested in.
Well, we invest behind two things. We invest behind companies which are trying to create a consumer brand, or companies which are trying to create an organized service. So we believe that shift from unorganized to organized and shift from unbranded to branded is probably the most powerful investment theme in India, which is playing out. We have invested behind companies which are doing that. So one of our investments is a company that sells biryani, largely by the way of delivery, called Biryani Blues. It is one of NCR's largest biryani chains. We are investors in a ketchup and sauces company called Adinath Agro. Adinath Agro has a brand called Surabhi, which is one of India's largest Jain sauce companies. Something which we believe is a very interesting niche. So niche leadership is a theme that we have backed, and we believe that continues to be very strong. We are investors in a company which is India's largest mobile repair and refurbishment company. So they repair mobile phones and sell refurbished mobile phones, called Yantra. Again, a company which is using access, to the large aspirational population of India, where affordability is still an issue. What they are doing is they're making smartphones accessible to a larger and wider audience of people by bringing down the cost by as much as 40%. We are investors in a company that's doing a great job in the current environment called Collateral Medical. We are probably one of the largest suppliers, largest importers and sellers of oxygen concentrators. What this company does is that it provides healthcare consumables and equipments, largely tier 2, tier 3 cities of India, which is currently underserved. We are investors in in a value retail chain called One India Family Mart. We have got 100 stores, largely in UP, Bihar, and Jharkhand. Again, a very underserved market. Population of the United States of America growing from a low base. We are investors in a company called Sukhi, which is one of India's largest fashion jewelry company. We are investors in a company called Flip Spaces, which is a tech-enabled interior design company focused on commercial spaces. And we have invested in a microfinance business called Sindhuja Microfinance. So most of our businesses are focused on serving the needs of the bottom of the pyramid. We are focused on categories which have a large potential. So the addressable market size that we are catering to is fairly robust. Most of our companies use a combination of online and offline channels, use technology, processes, and people as enablers. Like, for example, if you look at fashion jewelry business, Sukhi, it's 90% online. If you look at our value retail business, One India Family Mart, it's probably 99% offline. So we play across the board. We believe that certain channels are more interesting for certain products. We typically try and be the first institutional investor in most of our companies, and we try and discover these companies. So our focus, Avan, is to try and discover the set of what we call cash flow generating unicorns, because we believe that for enterprises to create value, valuation is important, but we also believe that creating sustainable enterprise is also fairly important.
Sure. Abhishek, given that large part of your investment pool is more a bottom-up story, and they do cater to the bottom of the pyramid, just wanted to understand, given that in the second wave, tier 3 and tier 4 cities as well have been hit, and the entire rural recovery theme that was prevalent at the start of the pandemic is also getting challenged. What is it that you're hearing from the companies that you've invested in as to how long could this aberration really play out? Because I'm getting, we're getting a sense that demand and supply is going to get hit more so for rural India as opposed to the urban parts of the country this time.
So I think the jury is out on how long this will be. There's an impact, which is for sure. The general view is that while there is going to be carnage because of the severity of what we are seeing, I think most people also agree that just like it has come in a very very fast manner, it should go away also in a very fast manner. So I think the general view is that it should blow over in a month or two, and then people don't expect this to last for 6 months. Now, if that was to happen, it would be a real challenge, because I don't think that's what companies are geared for. What we are seeing on the ground is that earlier a lot of the demand-related issues was because the government has locked in positions, the curfews, because of which stores can't open, because of which goods can't travel, because of which supply chain is disrupted. This time, I think there's real fear amongst consumers, and even if certain lockdown restrictions were not to be there, many of them would not venture out just for the regard for their own safety. So I think there's certainly a fairly
We seem to be snapping that line now with Abhishek. But Abhishek, great to get in all the insights from you as to how your own investment pool is getting impacted in the second wave.